Welcome back to this Moneycontrol live stream. You're watching Closing Bell with me, Nandita Khemka.
And I'm Santosh Nair.
Well, Santo, another day of records for the Wall Street, given the fact that the Nifty hit a fresh record of 20,167 or thereabouts, in the first half of the session. Thereafter we turned a little volatile and gave up most of the gains, but again we ended above that 20,100 mark. So it's a fresh record close for the markets, and the sensex has clocked a 10-day winning streak, Santo. So it's a string of gains that continues for the market. And if you look at the broader end of the markets, there were signs of worries. Day before yesterday we saw a very sharp thud when it comes to the mid-cap end of the markets. But today as well, we saw mid and small caps both outperforming the benchmarks. And in fact, the small cap index was up somewhere around 1% or thereabouts. A major buying coming in the metals pack. You have likes of Hindalco, JSW Steel. These were some of the top performers on the Nifty today. What didn't do all that well was the FMCG pack. So you had Asian Paints, that was the top Nifty loser. You had the likes of ITC not doing all that well in today's session. UPL is one stock that was the top Nifty gainer. Given the fact that the stock has been underperforming for quite some time, it's heartening to see this stock also participate and gain somewhere around 3% or thereabouts. Coal India has been, doing extremely well, but today was under selling pressure, and some of the other names when it comes to the losing end of the markets were Britannia, HDFC Life, and the likes. Let's talk about the pack that was buzzing in today's session. Santo, sugar stocks. I think you have already written an article in the morning, and I was reading about it, about how DAM Capital has initiated coverage on this sector with a positive outlook. But there were 4 stocks that DAM Capital is really positive about: Balrampur Chini, Triveni, Dalmia, and Dwarikesh. But let's talk about the dynamics in the sugar sector. There has been a shortage. The inventory, domestic inventory, is at a 5-year low. Then there are concerns of El Nino. But tell me, aside of that, the fact that sugar prices are globally at a 6-year high, there are some concerns as well going forward, right, which you have highlighted in your article as well. Why don't you tell us more about it?
Well, Nandita, the short point here is that sugar is pretty much a politically sensitive commodity. So already the government is getting a lot of flack because of the sharp increase in vegetable prices. Now you have the festive season which is coming up. Already inflation is pretty high, and the government would not really want that rising sugar prices creates a fresh headache for it. So it will try everything possible to ensure that sugar prices remain within a certain range, and that I think is one of the slight concerns for the sector. Now, just a couple of days back, the center had sought data from stockists as to the sugar that has been sold. So coming in, and that I think would have buyers a little cautious. So will you see a kind of huge re-rating that you've seen in some of the other sectors? I would say the possibility looks a little less, at least in the short term. Over a longer term, it's a different story altogether. But those who are expecting a dramatic re-rating in the very short term, I think they could possibly be in for a disappointment.
Right. So DAM Capital feels that over FY23 to FY26, the earnings for sugar companies are expected to be strong, given the fact that the prices may remain elevated somewhere around 37 rupees per kg for the next 1 year. And of course, for UP based sugar mills, which have high volume and high realizations, this could bode well, and which is what should comfort, provide them comfort when it comes to earnings. But of course, there is this whole thing of ethanol blending, because excess capacity is being utilized there as well, right? And with the government, of course, India announcing the biofuel alliance with US, of course, that will also bode well for companies like Praj Industries, so that's one thing that could work well, even if there are some curbs with respect to exports, or to bring down prices by the government. There is this whole ethanol blending opportunity, because the government has also preponed the 20% ethanol blending target to 2025 from 2030, right? So that could bode well for some of these sugar companies. Yes, we did see that government seeking data, it did come as a negative surprise for these sugar stocks, but over the last 1 month, some of these stocks have anyway risen quite a lot, in excess of 20% or thereabouts, and now with this positive positive report and positive views trickling in for some of these sugar companies, there could be some buyers in the market as well, even though there are some risks that you pointed out,
many
right?
brokers have turned positive on the sector of late, and definitely from the retail side there is a lot of interest. So, this is a kind of market where I think people are not really focused on fundamentals. So, whether the fundamentals are good or bad, there is a lot of money coming in at every level, and that I think will be the bigger driver in the short term.
Right, with that, Santo, you have some interesting stocks on your list today. Colgate.
Yes, starting with Colgate. Now, the stock had seen a good run up over the last month or so, mainly after its first quarter earnings turned out to be better than expected, but again it seems to be running into some kind of resistance at higher levels, particularly around the 2000 rupee mark. So, the run up has been quite swift, but clearly at higher levels buyers seem to be a bit reluctant. Now, the company has laid out some very grand plans. It had there's been a change of management. Last December, the management had made a presentation, but that didn't really leave many analysts impressed. But once again, I think there's some kind of interest building up there. Now, Jefferies is quite positive on the stock, and it feels that there is a case to be made for aggressive investments by the company. The whole point is that, you know, whether the market is big enough, whether Colgate can actually expand its market share by spending more. That seems to be some kind of a debate at this point of time. Jeffrey feels that it can definitely do so, whereas there are quite a few brokerages who are not as optimistic. They feel that this is a fairly saturated market. And Jeffrey's argument here is that just about 20% of the urban population brushes twice a day, and less than 50% of the rural population even brushes daily. So, if you are able to get the numbers up there slightly, that could make a big difference to Colgate's bottom line. In addition to that, the Colgate is also tapping its global portfolio, which is the whitening segment. So, that is again is something that Jefferies is bullish on. At the same time, you have Prabhudas Lilladher and Investec who are not so optimistic about the stock. Prabhudas Lilladher has said that the company's earnings and net profit, the company's revenues and net profits will grow at a rate of about 7.8% and 12.6% respectively between now and FY25. So, that is not a very huge huge rate of growth. So, that is something that many buyers, many investors seem to be a little cautious about, the rate of growth, that is. And Investec has said that the strong first quarter numbers was mainly due to has come off a low base. So, that again remains to be seen if it can be sustained in the coming quarters.
Right. Even if you look at the stock performance, Santo, it hasn't really, even though as you pointed out, all round beat on the back of a low base, the stock really hasn't done well over the last 1 month. And even if you look at the YTD basis, it has been given negative returns in a year when, of course, we have hit fresh highs. And of course, there's this whole thing about, you know, inflation going out of hand. That's also I think impacted Colgate as well, and of course the rural recovery not being as not being as per expectations is something that has kind of impacted Colgate as well. But let's talk about Grasim. That's the other stock on my list. Of course, it has announced that it will be launching its paints business under the brand name of Birla Opus. Now, the market knew that this company will become the KM Birla led company will be coming out with its paint business or launching it by the fourth quarter of the current fiscal. That's exactly what it will be doing under the brand name of Birla Opus, right? Now, the company is planning to offer a full suite of high quality products in the decorative paint segment. We saw Asian Paints react to it today. It was the top Nifty loser, even though Birla's maintained that they want to be the number 2 player. And analysts believe that Asian Paints will largely remain unscathed by the Birlas entering the paint segment. But even then, you know, with a capex of somewhere around 10,000 crore rupees, even existing players, even the number 1 player will have to be a little aggressive with its expansion plan or growth plans if you have a new, entrant in the market. So that is something I think that is hurting Asian Paints. But when it looks to, when it comes to Grasim, it has already piloted its first of its kind painting service in key metros, and it has introduced a range of imported wood finishes already. And there is a research and development facility in Maharashtra, and the company, of course, forayed with a capital of 5,000 crore rupees in 2021. Now, it has already doubled to 10,000, which is what I was saying, that with a player coming in with that kind of capital, that kind of moolah, the existing players, even though there is no threat to their position in the immediate future, but they will have to ensure that they maintain that, and the fear of loss of market share is any which ways there, right? With a player like Birla entering into the paint segment. So this space is looking pretty much interesting, given the fact that Asian Paints is the #1 player, and to reach #2 in say 3 to 5 years, the Birlas will have to ensure that they have their game in place, right? So this space is something that I think is very interesting going forward.
Barring Asian Paints, some of the other paint stocks have had a fairly good run over the last few months, and that makes it look as if the concerns over margin pressure that seems to have been overdone. But again, the story is just unfolding at this point. As Grasim steps up its presence, there is a good possibility that other companies might also feel the pressure a little bit. And with that, we move on to the last stock on my watch list for the day, which is Apollo Tyres. Again, the stock had a good run up till about a few weeks back, but again has been slipping sharply. This is despite a strong first quarter earnings performance. Now, the big worry here is that crude oil prices have started to inch up again, and when that happens, typically the raw material prices for tire companies, because most of the inputs that they used are derivatives of crude oil, and when crude oil prices go up, that means higher raw material prices for tire companies as well. So that is one concern. So far, there has been a significant improvement in Apollo Tyres operating margin, that has been largely on the back of stable commodity prices, both rubber as well as crude oil, and both have stayed pretty much in a narrow range for the last few months, and suddenly now crude is threatening to go out of control. So the big margin gains which Apollo Tyres was able to make over the last few quarters, now that could come under question, because if you look at the top line numbers, they have remained pretty much range bound over the last 3 quarters. The top line is not growing much, although the margins have been expanding, and which is what has been driving the bottom line. But now if the margins, which are currently around 16 to 17%, which is the gross margin, if those come under pressure, you could see net profits fall, and that in turn could disappoint the market. So that's the concern right now. Although sharp downside also looks limited at this point, because the outlook on the auto sector as such is quite positive. Sales have been pretty strong. There are hopes that the festive season numbers will also be good. So there are some positive triggers as well, but at the same time, the big outperformance that was seen in the stock over the last few months, that probably may have peaked out for the time being.
Right, these tire stocks have had a good run over the last 6 months, but I think off late, as you mentioned, over the last 1 month or so, they have kind of gone off track a bit. But we may of course depend on the festive season to revive the stock going forward. But with that, I think we've come to the end of this edition of Closing Bell. Of course, if you have any comments, leave them in the comment section below. And of course, I'll be back with the markets at 8:30 a.m. tomorrow, so don't forget to tune in. But for now, it's a goodbye from me and Santo. Thanks a lot for tuning in. For all your other news and updates, stay tuned to Moneycontrol.
Thank you.